In the weekly pending home sales data this week, we counted nearly 6% more transactions started than a week ago and 9% more transactions than the same week in 2024. That's 9 weeks in a row with more home sales in the weekly pending numbers than last year. Those sales levels are coming in about 5% more on average than July of last year. Homes that are going into contract now are sales that will typically close in August and September. NAR, when they reported last week their estimate of home sales for back in June, they still reported flat or down sales volumes compared to 2024. So that's of their June closed sale estimates. Home sales that closed in June mostly went into contract in April and May. And in fact, the weekly pending numbers in the Altos research data from those back in those months were much weaker than they are now. In particular, the May weekly transactions dipped hard in reaction to the first wave of tariff news back at that time. So the lesson here is that the housing data headlines are really old by the time they reach you. The headlines are now talking about June, but of course, the weekly pending contracts we track now are for sales that will close in August and September. And it sure feels to me like the data is showing those months will report slight improvements, maybe 4 or 5% growth over 2024 when the headlines are released in September and October. Home sales are inching higher along a backdrop of significantly greater inventory, and that's leading to basically flat prices. There are 27% more homes on the market unsold now than a year ago, and only maybe 5% more sales happening. We've had 3 years of elevated mortgage rates and 3 years of rising inventory to go along with it. That supply-demand imbalance means that home prices are flat or just barely positive compared to last year. So even though sales are a little improved, that's less because conditions are improving for buyers and more because sales at this time in 2024 were really slow. So with that backdrop, it is reasonable to ask, what if supply grows even more out of balance with demand? If new sellers grow faster than sales, will home prices fall substantially? Is the market at risk of a crash? So today we're going to look for signals of whether that's happening. I'm Mike Simonson. I'm the chief economist for Compass. In these videos, I look at the U.S. housing data every week. Our goal is to help everyone understand right now what's happening in the market so they can make the best decisions about buying or selling a home. In these videos, I use data from Altos Research. In the coming weeks, I'll be able to add insights from what we see at Compass, the largest real estate brokerage in the country by sales volume. So this is a powerful combination and a powerful view of the U.S. real estate market. So in the data today, let's start with inventory. There are now 860,000 single-family homes unsold on the market, plus another 230,000 condos for a total of just under 1.1 million homes in the active inventory. That's up only 40 basis points for the week, and is 27% more than last year at this time. In the summer of 2024, demand was very slow, so inventory was increasing quickly. And in fact, last year, unsold inventory was growing by 10 or 15,000 units per week compared to with only 4,000 units now. So inventory was growing much faster last year. The key takeaway on the supply side here is in late July is that inventory is not skyrocketing now nationally. Inventory continues to grow now, of course, and that's not unusual for July and August. There are more homes available pretty much everywhere in the country this year, even in places like Connecticut, which has 12% more homes on the market than in 2024. California has 37% more homes now. There are 60,000 unsold homes on the market in California. In Texas, the growth rate is slower this year, but there are 142,000 single-family homes on the market in Texas right now. So that gives you a sense of the range nationally. For the full country, there are 27% more unsold than last year. The Northeast has had generally very tight inventory, but even in those markets, inventory is climbing. That implies continued selection for buyers and limited price appreciation. In this chart, each line is a year's inventory curve. The blue line is 2025, and it shows 860,000 single-family homes on the market. Last year is the purple line. So even though inventory was climbing more quickly last year, the total number of unsold homes is much higher now and is back in the range from the years before the pandemic. So I've also highlighted 2018 here in orange. 2018 was a rising interest rate year and was also a rising inventory year. This helps us see the rule that rising rates create rising inventory. Falling rates would mean less inventory. But there's no signal yet that interest rates are falling. So we should expect that inventory stays elevated and climbs through Q3 into October for the seasonal peak, probably in October later this year. There are obviously a lot of fears out there that rising supply would lead to broad price declines or even a big price correction. And there are two aspects of supply to watch. So there's the active inventory that we just reviewed. There's also the weekly pace of new listings. So if supply is going to grow substantially from here, we'd expect that would require not just slow demand, but also more sellers each week. More sellers might be investors that decide to unload unprofitable properties, or maybe it's boomers finally retiring. Maybe that new listings volume would come from people who bought at peak prices in 2022 and missed cheap interest rates. But if inventory were going to really accelerate, we'd see that demand, that trend reflected in the new listings numbers. And the fact is that the new listings seem to be decelerating now. New listings for single-family homes this week ticked down by a couple percent to 72,000. There were another 12,000 new listings immediate sales. These are the ones that are already in contract. All in all, just 2% more sellers than a year ago. For the month of July, we actually measured new listings in total almost unchanged from a year ago. Basically the same number of sellers in July 2025 as July 24. No surge whatsoever. Earlier this year, the momentum looked like we'd see more sellers for 2025. Much of the year, you could see the line, the little growth over 24. You could see it in the blue line here, which was consistently above the purple line of 2024. So in general, the way to think about the new listings levels is that we can use it to track the big fear that people worry about in the housing market. Now, if you're an observer who believes, for example, that we have a big price correction imminent that would cause, for example, more sellers to feed into the supply, then you'd need to see that trend in the new listings data. And we do not see that trend in the data. The takeaway for the new listings data is that sellers seem to be backing off here late in the summer, and that will help keep a cap on future inventory growth. So new listings are past the seasonal peak and are ticking down until the end of the summer, to the end of the year. Home sales, however, still have a few more summer weeks to go before the autumn lull in the market. And there are tiny signs of optimism in the pending sales numbers. So the pending home sales indeed increased 6% for the week and are almost 9% more than the same week a year ago. So we've been sharing recently how nationally each week pending home sales have been coming in just a bit higher than the same period in 2024. That's an encouraging sign. And while the year's completed sales through June are still lagging last year's already low levels, the weekly pending numbers have turned a touch more towards growth. This week we counted 71,000 single-family homes going into contract, plus another 14,000 condos for 85,000 total. That's not a lot of home sales, of course. It's roughly 4 million annual pace. And in the chart here, though, you can see it's normal to have a few spikes in sales volume in July and August. There's always a few deals getting done before school starts. The Labor Day holiday then hits at the end of August and has a dip in transaction volume as we transition into the autumn market. The blue line for 2025 has been coming in a little above the purple line for almost 2 months. There are These are sales transactions that will close in August and September. So one caveat on the pending sales data here, there have been some reports of elevated levels of cancellations in contracts. This might impact the growth in the transaction count in the future, but we see sales 5% growth now in advance. It'll be worth tracking to see in a couple months how many of these pendings close. Meanwhile, the median price of single-family homes in the U.S. is $399,000 now. That's an uptick for the week and is just 1% above last year at this time. Home prices have been staying fractionally above last year nationally. As inventory builds, there are more markets with downward pressure on home prices. There are a handful of states where home prices are at or below last year. These are obvious places like Florida and Arizona, but also Colorado and Tennessee looks to be turning a little bit negative. In all these states, supply has had big increases for several years. In this chart, we have the national view of the median price of the weekly pending home sales. These are the homes going into contract each week to complete sales in the future. The blue line for 2025 continues to land just above the purple line for 24. I expect we'll more commonly have headlines mentioning home price decline over the next few months. There are a lot of ways that these headlines could show up. Month-to-month declines, seasonally adjusted declines. It's actually not uncommon for the market to go through monthly declines in home prices, periods with sharp spikes in interest rates or big trade wars or other like scary macro conditions can cause buyers to hold back a few months and shows up in prices. So it's much less common for home prices nationally to decline for the calendar year. So if you look at the multi-decade history, for example, of the Case-Shiller Index, there have only been 1 or 2 years outside the great financial crisis where home prices declined in the calendar year compared to the prior year. Only a few rare moments. And that's why home prices in this year 2025 are still positive nationally. But as mortgage rates stay high, inventory will continue to build, and that price trend bears watching. The momentum on pricing is down rather than up. So even though prices remain positive year over year, it is possible to see that flip before the year is out. And looking at the price reductions is one reason we know the price momentum is negative. There are more homes on the market now with price reductions than in any July of the last 12 years. Price cuts are climbing, as you'd expect for this time of year. Homes that get listed in the spring, if they don't have offers by the end of July, those are reducing their asking price now. So right now, almost 42% of the homes on the market have taken a price cut from the original list price. That's a lot. We know that there are plenty of homes for sale. We know that prices are not appreciating. And if you're listing your house for sale now, it makes sense to pay attention to this price reductions trend. The blue line here shows more price reductions than at any recent year. This curve also shows how sensitive buyers are to changes in mortgage rates. Rates have stayed high, but very stable this year. So the blue line has stayed high, but isn't changing abruptly either. The data ticked up just 30 basis points from the week prior this week. If mortgage rates were to spike over 7%, I'd expect you to see the immediate impact in this price reductions data. You can see that pattern in the orange line from 2022 that I've highlighted here. On the other hand, if we're lucky and rates fall in the second half of the year, then we'll measure that demand improvement here as well. We saw that pattern in September last year. Notice how the purple line turns horizontal. So let's sum up the data for the week. Because inventory and price reductions are high, home prices are up just barely from last year. But we see in the new listings volume and the slow changes in price reductions that the market isn't like cratering. It's moving slowly as mortgage rates have stayed high, but quite stable. So it's a big economic news week this week with jobs data and trade news. So stay tuned because this market can adjust quickly.